a lot of things that make our life more convenient are more abundant than they've ever been. The paradox is like for other things which are truly day-to-day requirements. And so if we think about education, daycare, healthcare, college tuition, the price of those things has actually gone the other direction, right?
Welcome to VC Uncovered, the series where we highlight the next generation of investors who move faster, take bigger risks, and build shoulder to shoulder with founders. I'm your host, Drew Glover, co-founder of Fiat Growth and general partner at Fiat Ventures. In this episode of VC Uncovered, I'm sitting down with Courtney Leimkuhler, founding partner at Springbank Collective, a firm investing in the infrastructure of daily life, from how we work, to how we live, to how we care for each other. Courtney, thank you so much for joining the VC Uncovered podcast. I've known you for so many years. I feel like we have been in the trenches together building venture funds, but just so everyone knows, when I first met Courtney, I was contracting for an HR tech company. I was presenting at the SAP demo day for their accelerator, and Courtney was one of the conversations I had, and I was like secretly building Fiat Growth at that time and Fiat Ventures. And I told her during that call, and that blossomed into a really awesome relationships. And I was so excited to have Courtney as one of the first VC Uncovered spotlights on our newsletter. But with that, I'm thrilled and honored to have Courtney on the podcast. Courtney runs Springbank Collective. I will not risk messing up the beautiful thesis they have. So I'll pass it over to Courtney to quickly introduce herself, tell us a little bit more about Springbank, and then we're going to dive into everything.
Yes, great. It is awesome to be here. I love hanging out with you when it's recorded and also when it's not recorded, obviously. Well, I am excited to share more about Springbank, as always. Could talk about it forever. You know the thesis very well and send me great companies, and we have co-investments as well. But for everyone else who's tuning in, thanks for listening. We describe Springbank as a venture fund that's investing in like the critical infrastructure that is paving the way for the future of how we work, how we live, how we care. And our basic take on it is that these are many sectors of the economy that have historically maybe been overlooked, even though they're massive and they're sort of the backbone of like how a high functioning society should work. But because they've been maybe considered hard or difficult, things like childcare or elder care, they have maybe escaped some of the traditional venture funding. But demographics are kind of making these bits of the economy like truly urgent now. And the exciting thing is, I think like tech is also making it very solvable now in ways that it wasn't a few decades ago. So we're really early stage investors. We're usually like the first or second institutional check, pre-seed and seed funds, and investing out of a $40 million fund right now that's about 2/3 of the way deployed. So getting on with it.
Love it. Love it. And I will say, I always tell Courtney, if I was a billionaire, I would be an anchor in her fund, because not only am I a huge fan of what Springbank does, but I'm also about to enter 40, have a wife, have 2 children. I'm in the middle of childcare. I'm in the middle of the sandwich generation, have a mother like on the backside of 70 who, as much time as she spends spends with us and as helpful she tries to be, I am taking care of her more than she's taking care of me now. And
Sure.
This is the world that we live in today. And I know
Yeah.
Springbank does a ton of investing and just like what the future of that looks like. I want to pull out a couple things that we talked about in our newsletter, which I'll make sure I link in the notes. But one is the Doritos versus daycare model that you talk about, where really it's very simple. Like it's as easy as possible to, or it's incredibly easy to go buy a bag of Doritos. Very hard to go find a really great nanny, a really great individual or team that can help you with daycare. And it should not be that way, because of the need and how essential it is in our lives. Would love for you to just talk a little bit more about, how you're trying to solve for that, companies that you're working with, and what that problem means in this day and age.
Yeah. Yeah. Totally right. The Doritos paradox, which sometimes we also call like the abundance paradox, which, is, I think, a very well established fact of modern life, is that a lot of innovation has really given us too much of many things, as much, if not more, of what we need. Consumer access to Doritos, consumer pricing for a lot of, tech and other lifestyle goods has, frankly plummeted through the floor in terms of the pricing over the past decade or two. So a lot of things that make our life more convenient are more abundant than they've ever been. The paradox is, like, for other things which are truly day-to-day requirements and fundamental to what you're describing, sort of how families live and what consumes the majority of both their wallet share and their mind share, the price of those things has actually gone the other direction, right? So if we think about education, daycare, healthcare, college tuition, all of those things have far outpaced inflation, whereas the price of our phones, our televisions, our Doritos have all, come down and have grown at significantly less than the price of inflation. So we think of that as just this like big consumer paradox where we have more of stuff than we ever had before at usually better prices than we could even imagine. But the things that really kind of stalk our day to day in terms of like getting through our lives have just become more and more inaccessible, more and more expensive, and frankly, more and more essential because more people are in the sandwich generation. We need care infrastructure more than almost any other working generation in history because we have more people working who are in that sandwich generation, who are caring now for aging parents and young kids. We have more moms of young children in the workforce today than we've ever had. And so the need for kind of thinking about something like childcare as economic infrastructure, the same way that we think about roads and bridges, right? Like we need roads and bridges to get people to their jobs. We also need reliable care infrastructure to get people to their jobs. I'm not saying it has to be publicly funded necessarily, but we have to invest as a society into addressing and solving these problems with tech and with like our best and our brightest. Like I love to see the smartest people coming out of Stanford thinking about these huge problems and not thinking about building yet another gaming company, for example.
Totally. And from a care perspective, I mean, obviously one of the hardest, most challenging parts of building in this space is trying to make it scalable. Obviously, from a digital perspective, we can make things scalable to a certain extent. If you're talking to someone that runs a growth marketing agency, and as much as I sometimes wish that like growth marketing can just be done with me vibe coding some incredible product, like I need people and strategists to be able to work with every single client to ensure that we're scaling something. The same thing sits in the care generation. We are talking about, I need someone physically to be with my kids. I will one day need someone to physically be with my mom, if that be short-term and long-term. So how do you kind of marry taking these people-driven industries, digitizing them to make it so it keeps up with this abundance concept that you talk about?
Yeah. It's a huge challenge, right? I don't think we're going to have robots taking care of Coco anytime soon. We might have them doing something in the background. Maybe they're vacuuming, that would be great. But you're totally right. A lot of the reason that many of these sectors of the economy have been viewed as really hard is that they are very people intensive. But I think there are huge ways to address at least some of the supply side problems with the availability and access around care by using tech. So yes, I don't think tech is the answer to the direct supervision nature of care, but we all know that there's a lot of other parts of the process between you deciding to have a child and needing to go back to work and someone walking into your home or you walking into a center to drop off someone who needs caregiving. And there's a lot of inefficiency built into that at the different levels. So the search process is incredibly difficult for finding care. The administrative process of enrolling or paying is still pretty paper-based in a lot of settings. And actually a stat that has really like blown me away is we think about the term childcare deserts. A lot of people use that term. Well, there's parts of the country where, there's no available childcare slot for, 40-mile radius or something like that. And which is totally true. However, what the stat that I heard was just so mind-blowing is there's a very large percentage, like half of daycares, I think it is, are running under the capacity of their physical footprint. So they are basically facing talent and worker shortages that mean they cannot reliably open that second classroom, even though they have the physical space to do it. And so to me, if there are ways that we can address some of the administrative elements of staffing and reducing churn and making these jobs more attractive so that they can be a steady income for someone instead of something that people churn out of really quickly because they're hard and frankly they're really poorly paid in a lot of cases. If we can strip out some of the administrative burden and cost, I think we can actually create supply in a way that today feels really hard. So I think there are lots of opportunities to think about applying tech to the administrative side of arranging care and also to improving the quality of jobs so that we can attract a different type of person into them and therefore increase supply. Yeah, we're still going to have humans actually changing diapers. I don't think that's going to change over the course of the world.
Yeah, obviously I'd love for anyone but me and my wife to have to change diapers. Tomorrow problems though, right? So myself, I'm a huge power law investor. I mean, I think a lot of like really early stage investors we're power law investors. Yep. We're looking for really incredible founders that are building billion-dollar visions that have the opportunity of creating a generational business. Sometimes when I think about this like care economy, I see a ton of use cases where they are true like billion-dollar visions, but I also see some of the most exciting potential problems that need to be solved as edge cases that aren't billion-dollar visions, but are driving, I think, can drive a ton of value to the market. How are you kind of sifting through, uncovering what is a generational opportunity versus something that I'm sure you wish you could invest in, but just like doesn't fully align with your thesis around investment?
Yeah, I think that's totally right. And because of our interest in the space, it means we attract a lot of founders and a lot of people building awesome companies that you're right, are not necessarily going to be venture scale. And to be honest, the worst part of the job is saying no to some of those companies, right? Because I love the founder. They're working on such an important problem, but it's not something which is going to have those power law type outcomes that you and I obviously both get paid to find. And that is one of the hardest parts of the job. I think in terms of how we sift through them, we really think about TAM like everyone else. A lot of the markets we invest in end up being like market creation type of bets where there isn't a market today. And so there, I think a lot of times we're really leaning into things which feel demographically inevitable, like an aging population. There's nothing that's going to change. Absolutely. More people are going to be cared for and living at home. And that will open up a huge number of opportunities. Some of them are going to be very people intensive and may not necessarily lend themselves to venture scale outcomes. And others of them are going to be huge venture scale outcomes. And when we think about that, it's care and as a topic in particular just has so many different facets, right? It also includes something like financial caregiving, which I know you and I have talked about a lot. There are huge opportunities just in the small category of things like elder fraud, right? Dozens of billions of dollars of fraud per year, the greatest wealth transfer in the history coming in the next 10 years of wealth moving between baby boomer spouses, as sorry to tell you, my friend, but the men are dying sooner. So they're passing first to their wives, then it's going to go to the millennials. So there's a lot of money on the move. And those are, huge outcomes, right? We think about estate planning, fraud protection, just the day-to-day act of financial caregiving, paying bills, keeping track of accounts, dealing with insurance. And so there's a lot of automation and interesting tech. Like in that one tiny vertical alone, I think there are some absolutely massive businesses. So we think really expansively about where is there, demographic inevitability, and then where do we think tech is unlocking things that have been really difficult to get to, in prior generations, call it, of innovation, that, feel like this is a 10x improvement over the experience from here. One example we have, not in aging, but is more in kind of workforce, is like teacher tooling. We have this company called Brisk Teaching that we've invested in, has over 250,000 active teachers. Over 1 million teachers have, downloaded it and tried it. It is cutting teacher time, by hours per week, in terms of grading, curriculum development, taking a first pass at doing feedback on an essay, creating, feeding in something like a YouTube video and saying, do me a lesson plan based on this, feeding in an interesting article and saying, adjust this for a fourth grade reading level, or customize it by these groups based on what you already know about how these kids are tracking. And so those sorts of tools are complete game changers if you're a teacher. And again, back to sort of demographics, lots of teachers leaving the workforce, burnout. It's not like
Yeah.
kids don't need to be educated. So there's some really interesting tooling opportunities there that don't replace the teacher, don't take a teacher out of the classroom, right? But give the teacher time back to focus on the stuff which is truly human, which is very hard to replace, and augment with all of these other efficiency enhancing tools.
Yeah. Yeah, I definitely love how you think about the areas to invest in at the core of, again, like, people will always pass on, kids will always need to be taught, those being like kind of tentpole places to look and then uncover the opportunities that frankly are going to have drive the largest impact.
Yeah.
Before I change the subject, are there any kind of spaces within care that like people are not focusing on right now, but as someone that lives in the space, you believe are just massive opportunities, these like unspoken opportunities that people aren't talking about enough?
Yeah, I think there are a few that come to mind. I mean, we've got bets in them, so of course I'm hoping that they do become more mainstream. Something that we have been spending a lot of time on recently, back to this theme of kind of financial caregiving, and I think of solving for some of the, call it, like off balance sheet liabilities in people's personal lives. Like off balance sheet liability was a thing in the financial crisis, right? Oh God, we have all these mortgages no one knew about. But I think about, the cost of getting sick, the cost of maybe caring for your millennial kid who wants to move back home when they're 25, which apparently is a thing, right? The cost of caring for an aging parent who may live much longer or want to live at home. And these are things that generally we don't have good products and planning around these sorts of down the road liabilities. They just aren't necessarily very well um, cared for in a way by like the existing financial markets. And so I think there's really exciting opportunity to help people plan and productize opportunity for these sort of off balance sheet opportunities that also may have a different constituent and buyer, back to this point of the great wealth transfer and the percentage of capital that is going to be controlled by women who we know generally direct money more towards things like education, healthcare, savings, more kind of values driven investings and savings goals. And so I think there is a big opportunity that's sitting out there that is the reality of demographic, kind of shift in terms of who controls the assets, and also just the cost structure that an American family is facing with a 20 or 30-year view that may be a lot different from what it was a few years ago. So those are some of the opportunities I'm really excited about. We have a couple portfolio companies that are nibbling away at that. So one I love is called First, which is actually a prenup legal tech
Yes.
company. Back to like start them young on the planning, the most important legal agreement, we hope you'll never have to use. But the truth is, almost 50% of millennials either have or intend to have a prenup. That data totally shocked me. Like, that's Harris Poll
Wow.
data. That's very good quality data. And that's really surprising, but it makes sense, right? People are getting married later. When they get married, they maybe have a lot of student debt. Maybe they actually own an apartment. They definitely own a dog these days, right? They have a pet baby. They don't want to inherit their partner's medical school debt if it doesn't work out. They don't want to lose the dog. And so people are really engaging earlier in conversations about their long-term financial planning, and, the opportunity to then talk to that couple, become their trusted advisor, and help them be thinking much more proactively down the road around wills, estate planning, things like that. I mean, that's not just for the ultra wealthy, right? We all need to be taking a very proactive approach to that long-term kind of financial planning, investment, and the sort of product menus that are available to us.
The prenup piece is really interesting. Also, the divorce side as well. These are like all different sides that aren't exciting conversations to have, which actually makes having a digital process in place that makes it as frictionless as possible
Totally.
really helpful
Yeah.
because there's nothing worse than having to do that, but also spend 10 grand on lawyers to make
Oh,
it
it's the
happen.
worst. That's
As
what I
well,
love. Like when we looked at first, that's what put me over the edge is like the UI is gorgeous and it's all the things we should be talking about, right? Each person signs on, you answer a bunch of questions. It shows you kind of like, hey, you're a little different on this, right? Whether it's your retirement plan or like, oops, you forgot to tell someone, you forgot to tell your partner that you have this debt or you own this property or whatever. So it surfaces these things that we all need to be having as conversations, but we don't. We avoid
yep.
them. They're awkward. They're hard. And this is a place where we've seen it, right? We've seen that, men, for example, talk to AI for, mental health and therapy at a pretty surprising rate. It turns out that we are willing to engage in some of these difficult conversations and areas of care or, human engagement with the support from a sort of digital companion. So let's use it.
Yeah, no, 100%. Yeah, and Libby, their CEO, I've met many times. She's super
Yeah.
impressive.
Yeah. She's
But yeah,
amazing.
really exciting edge case
Yeah.
that I think it's much larger. We see it as an edge case, but it's actually a use case. It's just not. It's spoken about like an edge case.
Yeah.
To change the subject a little bit here, you talk a lot about the operator edge in VC. And I will actually
Hmm.
say, Courtney, I feel like me and you initially connected because we're both operators and we're in this
Yeah.
VC space. And
Yeah.
it's just a different level of energy. I think it gives us a lot more, it gives us an edge when it comes to underwriting and recognizing talent, but more importantly,
Yeah.
recognizing talent that can actually like follow through with all their promises. I always talk about this like say to do ratio always being at 100%, and like a really good operator make sure
Yeah.
that's a really high percentage. So would love for you to talk a little bit more about what it means to be a VC that comes from an operator background, kind of being in the trenches with every single portfolio company that you work with.
Yeah. I mean, I think it makes the job even more fun because who doesn't like the investing part, right? Spending all day talking to incredibly smart people who come with great ideas.
Yeah.
But I also love the follow through part to your point. I think some of my best days are also the days when I spend an hour or two with a founder trying to figure out something that's hard, right? And it
Yeah.
varies a lot. I'm an M&A person by background, so having lived through, $20 billion worth of M&A transactions is really
And Courtney,
helpful.
give the listeners a little bit of background on what you
Yeah.
were doing prior, and just feel free to pump yourself up a bit. It's really impressive, but they need to hear why you are an operator, how you became an operator.
Yeah, yeah. So I have spent a long time, sort of almost 20 years as an operator in mostly financial services. And I think of it as, now I work in little finance. That was definitely very big finance. And I sort of started as a banker at Goldman. I actually spent a few years at a company that Goldman acquired. And that was my first taste of like really living through, investments in M&A sound really good. And then you got to go actually do the thing. And so I had the opportunity to go do the thing on the ground and figure out what to do with this company we had acquired. And frankly, to make the most out of, in particular, the sort of technology assets that we had. And, from there, I ended up spending almost a decade at the New York Stock Exchange. In basically an internal banker type capacity. I ran strategy and M&A for them. And that was an incredible ride. I got there when it was still a nonprofit owned by its
Wow.
members. And so we had to turn it into a private for-profit company for starters. Everything from setting up billing systems to, engaging customers in a totally different way, preparing a budget for the first time, all those things, which was crazy because at the point it was already a multi-100-year-old institution. So it was this very well-known brand that in a way was still incredibly young in terms of developing as a real company. And then we took it public through an M&A transaction with a public company. So almost a sort of SPAC type of deal, but it wasn't a SPAC. It was just a small public company. But that was a sort of backdoor way of going public, which is what we needed to do because we were a mutual. We just needed to go quickly. So that was super interesting. And then I spent the next, 7 or 8 years running M&A, and we did a bunch of deals. We did tuck-ins, we did tech investments, we built a tech business from scratch to be, a few $100 million of revenue, mostly through acquisition. And then we sold the company in 2013 for $10 billion. So that was just like an incredible ride. And I saw it all, and I made all the mistakes for sure as well. So that was incredibly valuable experience. And then after we sold the company, I was the CFO of Marsh for 4 years, which is an insurance broker, 130 countries, completely different from the NYSE, actually a much more mature public company in a lot of ways. So that was really exciting as well. That's sort of the dawn of insurtech, which is why I went, just thinking here's another old industry being disrupted by tech. How do the incumbent figure out how to survive and thrive, which they have more than done. So Marsh is a fantastic company. So I feel like I have definitely been in the trenches. I've seen a lot within my jobs. I've worked for really big companies, but I've also worked in groups that were very small, very edgy at the front end of tech adoption, at a time when, most people weren't really thinking about it. So that has given me just so much perspective on, I think number one, how do you think about where change is going in an industry? And specifically, how do you think about and understand the incentives of the people who are already operating in it? Because there are lots of good ideas and certainly many ways to make something like insurance better, right? The hard part is not looking at something that's a sort of old or overlooked industry and pointing out what could be improved. That's super obvious to everyone who works in the industry. The hard part is actually figuring out how can you design something which has that kind of 10x improvement, and then how do you actually drive through the execution and the adoption? How do you work within the constraints of the existing incentives, or how the companies in the industry interact? What is the value chain within the industry? How can you drive technology and change all the way through that value chain, which is often the key to getting adoption even within your own company? So I think I've just had a huge amount of experience both doing it right and doing it wrong, and recognizing there are lots of intangibles that often are the difference between success and failure. It's often the incentives of the specific humans who are involved. It can be as simple as, cultural fit between companies that are coming together. And so sometimes you can get the product exactly right, but if you get the change management wrong, the whole thing obviously is a failure, and it doesn't matter how good the product was. So I think having that 360-degree view of what it takes to, really drive adoption and change has served me really well, both in terms of evaluating investments, many of which seem really good and smart, but probably wouldn't survive contact with the enemy once you really kind of dig into the industry dynamics.
I love that. Now, I would also say your operator background also gives a lot of your investments and the founders and the people within those businesses some upside, because a lot of VCs are just giving money. A lot of the VCs that are I would say this next wave of VCs are giving much more than money. And I actually think a lot of founders are getting smarter here, where they're saying, we only want you on our cap table if you can give us more than money. Typically that's in the form of maybe a distribution advantage, maybe an operational advantage, maybe a data advantage. But I would say from you being an operator that's done a lot, what would you say your superpower is? Is that call it the investment plus type of mentality of what's that extra sauce you're putting on every investment that really helps them out?
Yeah, I think for us, a lot of it comes down to almost like the sort of business acceleration stuff when it comes to introductions, for example, on the distribution side. So thinking about, in particular, B2B, what are the partnerships and how can we use our network, which we've established over, many decades between myself and my partner, Alana, to make those kind of introductions that are unlocks on the revenue side. So we're able to do that pretty consistently for our portfolio companies, and then also coach them through the process. One of our portfolio companies is about to sign a huge agreement with one of the largest brokers in the country. And I mean, that is like a roll up your sleeves, I am really in it with them, thinking through not just what does the proposal look like, but it's literally calling me saying, they came back and they struck this term and they, changed the economics. And it's the tactics of like, what should I do next, right? Should I call? Should I send an email back? Should I have my lawyer call them? And I've just been through that so many times. And so there's a lot of sort of on the ground tactical support, uh, especially when it comes down to partnerships and big
Yep.
strategic relationships that can be really helpful. The other thing I say, which I think stands out, is I think if you've been an operator, stuff goes wrong more than it goes right. I think if you've been a career investor and something starts to go wrong, it can feel like you made a mistake or this was a bad investment. And I think if you're an operator, that happens all the time. And so I really try to get to the point with my companies where I don't want to see the vanity metrics. I just want to talk about what's not working. And I want them to be
Yeah.
open with me because I'm not going to freak out. I'm used to it going wrong. I've been in the
Right.
seat when it's gone wrong. And I think being able to have that trusted relationship where I can just say, hey, don't tell me what's going right, tell me what's going wrong, and we can kind of get to it, also really helps. And so there's just a sort of calmness that comes with having seen the cycle, having made the mistakes, having lived through, a model that turned out to be really wrong or off by half, that can be really valuable for those like trusted relationships that then gives access to all the other things that I can do with my network or with my background, in M&A, for example.
One thing that you talked about in our newsletter issue was the intuition, using intuition as a veto power. And I think that's super fascinating because I say like universally, for the most part, VCs use intuition as this, like, I've spotted the superpower in this founder. Like, I know this is the person, but
Yeah.
you have sharpened the knife of using it as a veto moment of, actually, this is why I'm not investing. And
Yeah.
would love for you to shine a little bit more light, because I think that's a superpower that all VC should actually have.
Yeah, the road to VC surely is littered by, the charismatic founder who felt like the next big thing, of course. And obviously that's the false positive trap that we're all very susceptible to and trying not to fall into. I think some of it's just my personality. Like I'm just a very data-driven person. I'm really drawn to founders who know their business inside and out, know their metrics hard, know the industry dynamics, as I said. I'm less attracted to founders who have been, cooking 3 or 4 different ideas that are all really interesting and then finally landed on one, in terms of 3 or 4 different industries. Like, I think that's just something that I'm a little less drawn to. So I tend to be someone who operates from a position of like, I want to see data, I want to see expertise, I want to see depth. Where intuition kind of kicks in, on the positive side, of course, and I've talked about it before, like there are things which seem inevitable, and I can often make a decision, which is, I don't know if this is exactly the way it's going to go, but I know 5 years from now, we will not live in a world, for example, where we have no idea what's happening inside women's bodies. That's a black box of their hormones. Like, I'm pretty sure in 5 or 10 years, that will absolutely not be the case because hormones are so essential to almost every other bodily function. And so I can make a bet like level 0, which is, pretty far down the road in terms of coming to fruition because it's a hardware play. It's going to have an FDA angle, but I know that continuous hormone monitoring feels like something we will do. On the flip side, the intuition of stopping things and the veto, to me, I think mostly surfaces in 2 ways. One is, I think it's mostly around founder dynamic. It often comes up if there are more than one founder. And to me, I am very attuned to how the founders are interacting with each other. And I really listen if something about that interaction just doesn't feel exactly right to me. Back to sort of the operator thing, you can have the best strategy in the world, but if the people are not able to work together, it's going to miscarry. And so I really do use my intuition a lot. Like if something just doesn't feel right to me, especially between the founder and the co-founder or the founder and other teammates, if that dynamic is off, I can kind of overlook everything else, and that'll be a veto. So that's a really big deal. I think the second place intuition kicks in for me is, venture everyone loves to show a lot of early success, and I am very skeptical around the early client wins. If there are sort of some big early client wins, to me, there's almost always a story there. Um, unscalable is the name of the game in early venture, but
Yeah.
unrepeatable is a problem. And so I really feel like that's where I get my antenna up. If the story feels too good to be true on some of the larger initial client wins, if I kind of can't make sense of that one, that'll also be a veto for me.
Yeah. Unscalable versus unrepeatable. I mean, that's a LinkedIn post if I've ever heard one. Uh, that's good though. I really like that. I think that's just like generally a question that should be asked in every
Yeah.
kind of like honestly B2C, B2B, and B2B2C.
Yeah.
Okay, we're wrapping up here. I'm gonna start asking a couple quick fires. The first one I have is what is like one wellness hack that you do that like everyone else should be doing?
I'm a total convert to the Aura Ring. So that is my advice to everyone. I think it's sort of the best kind of data in the background that is actionable but not invasive. I love it.
Right on. I feel like I've been at the very end of a purchase of an Aura Ring many times, and I always
Many
pull
times you're
back.
wearing the plastic thing around. I hear
Yeah,
you.
yeah. I'm a whoop guy though. I wear the little whoop band.
Oh, okay.
Um,
I hear you. I hear you.
I don't think I need both. So you go to the airport, someone's offering you round trip ticket with whatever, your family, anywhere in the world for a week, fully paid for. Where are you going?
Really would like to go to Bhutan, actually. Have never been. Love to go
Where
there.
tell me where that is, just so everyone
It's
knows.
near Nepal. It's like a tiny little country that sort of measures its GDP in happiness equivalent instead. So beautiful scenery, amazing hiking. Seems like a really cool place.
Love that. Love that. If you could only invest in one industry outside of your current focus, what industry would it be?
Probably go down the rabbit hole of biotech, actually. I think there's so much incredible stuff happening there. We've done a couple. We'll only follow a really established biotech investor into that one.
Nice.
But yeah, that would be awesome. Such cool stuff.
Love that. If you could be the best at any sport, like the best for the next 10 years, what sport are you choosing?
I think I would choose tennis, actually. I feel like tennis has just figured out how to get the most amazing, like fancy people to show up and watch. So I feel like who
Such a
doesn't want
vibe.
to play in front of, the King of England? That sounds great.
Come on. Exactly. Let's go to Wimbledon and win and
Let's do
enjoy
it.
the
Those
spoils.
trophies look so nice. Yeah.
Okay, last two. What is the last book you read that made you want to share it with everyone?
Oh, can I do two?
Bring it on.
Oh, three. I've got three. Sorry. Okay.
Bring it
Number
on.
one, I just finished Boys in the Boat. Great book. Manages to be very suspenseful, even though you know the ending. It's about a University of Washington crew team winning gold at the Berlin Olympics in 1936. Very cool. Invisible Child, another fantastic book written by a New York Times reporter following a homeless child in New York. Truly heartbreaking. By the end, you kind of hate everybody. So, there's something for everyone, liberals, progressives, conservatives. We're all part of this problem. And then third book is a great book called Subliminal, How Your Unconscious Mind Kind of Rules Your Life or something like that, which is sort of my pet topic, and I highly recommend.
Last one is there's a founder that is thinking of starting a business in the care space, hasn't landed on their idea yet. What is the one bit of guidance and yeah, what's the one type of kind of guidance you'd give them?
I think it's avoid the me search. I think care is so universal. We all, to some degree, are caregivers. And I think it's the sort of topic area where everyone comes into it thinking that they need to build for their unique problem. And the truth is, our problems are not unique, and we are not the first to encounter them. And that is the biggest trap I think people can fall into. Care is an infrastructure issue, it's an economic issue, and it needs to be solved at scale. It's not about building for the particular friction point that you have encountered. Of course, you have, we all have. Again, it's not about identifying the problem. That is the easy part in most difficult opportunities. The really hard part is figuring out scale and adoption and focus on thinking about it as infrastructure, as economic infrastructure, think about the incentives, the huge barriers to change, and solve it as a structural issue that it is, and avoid this me search problem.
Love that. And if you can't get out of the me search, just talk to a couple potential customers and do a little research before you
Hire
before
Drew
you-
and have him talk to some customers.
yeah, before you vibe code for the next couple months here. That is incredible. Courtney Leimkuhler, thank you so much. That was awesome.
Always great to
big
hang
fan
out.
of you, big fan of Springbank, and thank you for being on VC Uncovered. I'm sure we'll see each other soon in New York.
I hope so.
Yeah.
This season is supported by Silicon Valley Bank. For decades, Silicon Valley Bank has been a true partner to the innovation economy, helping both founders and funders grow. Silicon Valley Bank, a division of First Citizens Bank, member FDIC. Please note, this podcast is for informational purposes and not investment, financial, or legal advice. The views expressed are those of the speakers and do not necessarily reflect the position of Silicon Valley Bank.